Welcome back to the Successful Farming Podcast. In today's episode, commodity market experts Al Kluis, Bob Linneman, and Nick Repke discuss the recent USDA crop report, focusing on corn and soybean yield estimates, market reactions, and global supply and demand dynamics.
Good day. It's Friday, November 14th, after the USDA crop reports and data dump. What a day. A lot of information here today. Let's jump right in it. Bob, can you give me a summary of the yield and production estimates for corn, and also don't just give the numbers. Let me know what you think of those numbers.
Oh yeah, I've got some thoughts, Al. I definitely have some thoughts on this. But, the numbers, let's get into it. The report today had corn yield pegged at 186.0 bushels to the acre. That compares with a 186.7 in September. The trade was looking for 184, Al. Nick, I know we had talked about this before the report. The trend was lower, but the big question was how much lower. And the USDA kind of it seemed like they erred on the side of caution here, with a slightly less number than September, but not where the trade was at. So I think that's going to be a big discussion over the weekend amongst traders and analysts as they dig into the data. Total production at 16.75. It's a big number, Al. I mean, that's a big crop. Anything over 16.5 is a big number. So I mean, there's no way around that. In September, that was actually 16.814. So we're down just a little bit there. Again, the yield down is primary catalyst for that. Soybeans, you get at the yield at 53.0. The trade was looking for 53.1. September was 53.5. So half a bushel an acre decline there. I think that was a little bit surprising, a little friendly maybe. And then production at 4.25. Just again, a little bit underneath what the trade was expecting and below the September number as well there. So I think, at first glance, Al, a little bit friendly to beans and a little bit negative to corn. Without seeing the market reaction, I think that's would have been your initial kind of knee-jerk response. But the market did not react that way, Nick. I mean, what was your 2 cents on how the market reacted right away?
Yeah, a little surprised throwing the bathwater out with the baby. It looked like to me. I agree with your analysis there on corn. It wasn't near as aggressive as maybe you and I thought it was going to be this month. Soybean yield, though, wasn't too bad. We didn't expect any dramatic cuts there at 53.1. It came in at 53. Your harvested acres are obviously left unchanged, and the soybean production number came in at 4.25 versus the 4.30 last September. So not too bad. Soybeans can't lose a lot on production because we get very, very tight, and we'll get into that in a second. But as far as the market reaction, like you mentioned, I think we ran up into it, bought the rumor, and sold the fact. Huh?
Yeah, I would agree with that. I mean, Al, ending stocks, the numbers were on corn 2.154, and I think the trade was looking for somewhere near 2.136, so a little bit stronger than what the trade was looking for. September was 2.11. Soybeans, you had to carry out ending stocks for new crop at 290. The trade was looking at 304. September was 300, and wheat, this was the real tough one to swallow. Wheat ending stocks came in at 901 with a trade average looking for 867, and September was 844. So really a bearish number for wheat. There's no way around that. I mean, it was and kind of a surprise there. Anything over that 900, Al, it's going to be it's going to just loom over the market that, any stocks over 900, we're okay.
Yeah,
We don't need to rally this thing very far.
We talked about it during the webinar, Bob, and I said in my lifetime we might see a bullish USDA report, but now you're saying it might be your lifetime before we see one. So
Nick and I might have to be on the docket for that.
Right. One thing that's interesting, I do think that this USDA disclaimer kind of suggests that we might see some changes in December and January. Never seen this with the USDA report today, but this came with the report. Note, due to the lapse in government funding from October 1 through November 12, some U.S. data sources that we are typically used were not available for the November 2025 WASDE report. Changes to the U.S. balance sheet continue to reflect all U.S. government data available, quote, at the time of this publication, but this month, in some cases, the information was limited. And so this really explains why we saw the modest adjustments we have. And I do think it opens the door for some pretty significant changes when we look ahead towards, I think it's December 9th, and then the final crop production report in January of next year. So, Nick, you're in the office, and we were talking about ending stocks of soybeans. What does that take that stocks to use ratio down to?
Yeah, we plugged in these numbers here today. It comes out that stocks to use ratio at 6.74%. That's the lowest in 3 years. We're getting, right down to the nitty gritty there with your ending stocks sitting at 290. Um, Pretty bullish longer term speaking. There isn't any wiggle room. You and I and Bob been talking about that for months. They're just they can't afford to have soybeans go any lower, and now we're starting to see demand pick up a little bit with China's commitment to pick up some beans. And if we pop over to the corn, kind of the opposite over there. We ran those numbers too, Al, at ending stocks at 2.1 billion bushels, gives us the stocks to use ratio at 13.33. Last year we were at 10.1 is where we finished. And the year before, 23-24 crop was 11.78. If you want to go back and reference any of those charts for the last 2-3 years, it'll obviously show you that stocks to use at 13 isn't great for pricing.
Yeah, I really think on the exports on corn, looking at the current pace analysis of what we're doing, we're going to be exporting a lot more corn than what the USDA has indicated. And I'll bet if we do these reports in the future, Nick, that we'll see that number go from 2.1 to 2 to 1.9. It depends a lot, of course, on feed and ethanol, but the exports have consistently been understated for the last several years. And I think that's why we're like to see changes in future reports. And boy, that stocks to use ratio in soybeans. What's the cost of a $12 call? Tell me.
Yeah.
Yeah,
we have
no
we have
kidding,
our
right?
customers 50% sold out, and I'm very happy with our average. But man, if they want to smack this thing next week, we got to have a strategy in place to buy some calls. I just don't see soybeans staying here at this 11-11.20 level. I think that's setting up for a great buy opportunity.
And I think it's worth noting too for corn, like the basis levels across the Midwest have improved over, since harvest got hit the 50% mark. And I mean, and with a 2.15 billion bushel crop out there, that doesn't make a lot of sense in my mind. I mean, it seems a little bit odd, a little disconnect, not a lot, but it's just something that we should keep an eye on. If basis continues to improve, that might suggest that either the bins are plumb full and, bags are in the field and the farmers retaining all that ownership of the corn, or there's just not that much corn out there. That could come to be light too. So keeping an eye on those basis levels, I think, will be pretty important going forward.
And kind of what you're talking about, Bob, we saw basis improve in Iowa. They dropped their bushels, 3 bushels from September to November. So that's an interesting note on the USDA stuff. South Dakota, where basis isn't great and probably not getting better, they raised those 6 bushels. So in a few months, you went from 167 to 173, and then you had some basis weakening. I mean, basis has been pretty rough out your way for quite a while, honestly, the last 2-3 months.
We have shirts that say we live in a rough basis area.
We got to get some of those trains going west.
Yeah.
Yeah. And if you look up the lineup of ships in the PNW, we have got boats coming in for corn going to Japan, Taiwan, South Korea. We've got a few boats starting to come in for beans, Vietnam being one of the top ones, Indonesia, and now a few for China. So be patient. We've seen basis improvement, Bob. I think we're going to see more. I know we had some guys in southern Minnesota and northern Iowa delivering the processing plants on beans. They had a 30 under bean basis, and they had some $11 cash beans, and I was pretty happy after the way the outlook was so bleak in August. It's really turned around.
No, it really has. And I think something that, a couple phone calls after the report today that I talked with clients and they were wondering, well, now what? What's going to be the news headline? Where are we going to get the spark to really push this market one way or another? And it's a good question because now we have to step back and say, okay, let's spend the weekend digging through the data and get some specifics and start kind of really trying to determine if you believe this area, believe that area. And like Al mentioned at the beginning here, the USDA just didn't have all their resources. So I mean, if the December report rolls around and now we're going to have access to all the resources that we would have here normally, what does that say? What does that report say? And I think that's going to be a catalyst at some point, Al and Nick. I just don't know that it's next week. It's going to be a little bit, I think, for that. And then when does South America become kind of in the spotlight again? I think that's a
Yeah.
real question. It's got to be right around the corner.
I talked to respected analyst Dr. Michael Cordonier today. He's becoming concerned about the dry weather that's developing in large parts of Mato Grosso do Sul. I think it's about 20-25%. Can't really say that it's done yield damage yet, but it's taken the top end off, and it will do soybean yield damage. And I think more important is that they're delaying planting their double crop corn. And so this is an issue. I also talk to our weather guy, DT, a couple of times a week. He is indicating that this La Nina pattern that has started to develop typically dries out southern Brazil and northern Argentina. And so Argentina has been off to a really good start, almost too much rain in some areas, and now that pendulum is going to swing the other way. We talk a lot about South America starting in November, but really it's the weather in December and January that determines the final crop supply. And my many years of watching the crops and the markets, seems like whenever everything's looking perfect up front, just wait, something bad will happen. And that, I don't wish them bad news or bad crops, but a weather scare would be good for farmers in both continents.
Yeah, no, it would. And if you look at the world ending stocks numbers from today, corn at 281, soybeans at just shy of 122, and wheat at 271. I mean, the corn number is still friendly. That is, the line in the sand that we always used to use was 300. Well, we're well under 300 here,
Yeah.
and soybeans at 122. I mean, a number closer to the 110 area would definitely fuel the fire for the bull camp. But 122, and South America grows so many soybeans, so an issue down there could quickly change the world ending stock situation, Al. And that's something that I think traders are going to watch closely because the U.S. doesn't have a lot of excess right now.
Yeah. South America needs to have a big crop. The big crop is built in. So, what kind of surprise are we going to get? Well,
Al,
thanks, guys. Go ahead.
yeah,
Final
going
comments,
forward,
Nick?
do you want to maybe run through the charts real quick? We did have
Yeah.
some decent sized moves. Maybe you want to talk about
Yeah,
some of
we
the technicals
poked
and
we
everything.
poked the March corn up to 457 this week. We had some sell offers in up at 453, so we made some good hedges out into there, and I think that high at 457 on the March contract will be tough to get through. On the January beans, we probed all the way up to 1152. I've been doing a lot more of the hedging into the March at 1161 and a half. Darn it, we had offers in to sell at 1164. We missed it by 2.5 cents, but looking at the report today, I'm very comfortable with it. So I think as we get more into the Thanksgiving holiday mode, we're going to go more from a trending market to probably a trading channel type of market. I think the highs that were posted today will be tough resistance going forward. I think support will be at this week's lows, and we're just going to likely put some M's and W's in. The negative numbers, both global and U.S. numbers, were wheat, and I'm really concerned. We've got half of the wheat hedged at a really good price, and got within about 20 cents of making another 20% wheat sales. Something that if we retest this week's highs, we're going to have to take a hard look at it. So I'm willing to buy a break, especially in soybeans and for corn, between the carrying charge and basis appreciation. I'm just saying to be patient.
Yeah, and I think technically it's worth noting that today's low 20-day moving average on the December corn, March corn as well, you've got really good support at the 50-day moving average down at 424 and a half for next week, and you have the 100-day moving average just underneath 420 for next week. So good support in the next nickel to dime lower in corn. And with those levels there, and with the numbers we saw today, do we grind there next week and just kind of hash out and see if we can't start putting in some M's and W's on the chart? That makes a lot of sense to me given the technical support there.
Yeah, I agree with you, Bob. It's taken us 6 weeks to finally move, 22, 23 cents. And, the next 6 weeks until that January report or however long that time frame is probably grinds in between all those moving averages. The nice part is that they continue to, at this point, they're slightly turned higher. So hopefully the bottom end continues to rise.
Yep. Jan beans for next week, the key number there, the 20-day moving average, 1101. It'll probably be upwards when we resume trading on Sunday, somewhere near 1105 would be my guess. And you've got the prior 2-week low. Al, you can double check me on this, but I think it's 1103 and a half.
That's
So
right.
yeah, on the Jan beans. Real important areas there, right between 11 and 1105 for next week on the January soybean contract, and it is now the front month contract. And Al, did we get a gap? Will we get a gap higher then on that continuation chart, or
Not
because it's
because
a lower day?
No, the high on the November contract was 1138, and the low in the Jan was 1122. So the typical gap is not there. But now you look at today's high on January beans is going to be tough resistance. The low on November beans is going to be support. So that's at 1112. I like the 2-week average down at 1103. I like your moving average analysis. I think anything pulls back in that area around 1105. Certainly going to be looking at buying some calls.
Okay.
Well, that's
I
it,
like it,
gentlemen.
guys.
You enjoy doing these, and if you would like to get a hold of us, Bob, give us your toll-free number.
Yeah, 888-282-6141.
And Nicholas, to get hold of you?
Yeah, call the main office here. It's 888-345-2855. We're obviously happy to answer any questions.
Very good. Well, thanks, gentlemen. Look forward to have a good weekend, and it'll be an exciting week again next week. Thank you both.
Thank you.
Thank you to our host today, Al Kluis, with his associates, Bob Linneman and Nick Repke, for sharing your expertise on the USDA crop report. For more information like this, please visit agriculture.com, and don't forget to like, subscribe, and leave us a comment. You can also follow Successful Farming on Instagram, Facebook, and Thread, and make sure to check out our other podcasts, 15 Minutes with the Farmer and Successful Farming Daily, wherever you get your podcasts.